Hello and welcome to Big Deal. I'm Nisha Poddar. Now, electric vehicle sector in India is being catapulted to another level of growth with a couple of manufacturers making way to the public market. With electrification thrust as well as government support, this space is seeing high interest and traction amongst the investors. But what are those sector dynamics, levers for profitability and also the valuation parameters? Let's find out from experts in the sector. Let me welcome on the show Amitabh Saran of Altigreen, Sridhar Narayan from GF Capital Partners, and Srihari Mulgund, EY-Parthenon, India. Gentlemen, so good to have you on CNBC TV18. Now, to begin with, I must also point out that mobility is on track to become the first sector to achieve full electrification in the country. Srihari, beginning with you, how do you see the penetration and the growth projection across various verticals of electric vehicles?
Thanks, Nisha. Great to be on the show, and I look forward to this discussion with my colleagues. So the Indian electrification journey in the automotive sector has just started. If you take the parlance of IPL, the first 5 years or 6 years of power play have been phenomenal for the Indian market. FY24, our market was roughly about 1.6 million units of electric vehicles sold, of which roughly 950,000 were electric two-wheelers. We sold roughly about 90,000 of electric four-wheelers, and give or take about 85,000 of electric three-wheelers in the L5 category. One of the large categories in India also remains the electric rickshaws, which we sold roughly about 500,000 vehicles. We see significant penetration and growth happening in electric two-wheelers and three-wheelers. And also the next bellwether will be the light commercial vehicle market moving forward. Electric two-wheelers, 2030, we expect about 30 to 35% penetration, assuming scooters are the main products to be electrified. But if motorcycles take parlance, then you probably could see a significant more penetration in the market. Electric three-wheeler market, about 35% penetration, particularly on the passenger side. The cargo side would be a lot bigger, roughly about 50% penetration. And then the electric four-wheeler side, we expect about 20 to 25% penetration by 2030.
All right, so high intensity of growth that is being projected for the electric vehicle segment. Let me throw this question to one of the manufacturers. Amitabh, what's your point of view as a manufacturer, as an entrepreneur, especially with what we are seeing is that the commercial EV is able to crack the market, a very price-sensitive market in India first?
Absolutely. And, commercial vehicles will be the first to convert. And that's largely because, they're driven by business. They're driven by profits. They're driven as a fleet company. In India, commercial vehicles have been graded according to payload, according to GVW, distance and all that. And if you look at any of these parameters, EVs will be the ones to win in this segment. And that's the reason why very heavy and very ambitious targets, even for 2030, as far as the electrification goals are concerned. I'm, of course, very, very bullish on three-wheelers, small commercial four-wheelers. We do believe, as Altigreen, that three-wheelers will touch the 80+% penetration in the segment. I think buses will also be extremely important, 40 to 50%. We do believe buses also, intra-city buses, to get converted. And one important segment, which is based on usage, is the taxi segment, where it's the same personal vehicle used as a taxi. We do believe that about 25% penetration is going to happen in that segment also by 2030.
Right. All right. So those are big projections coming in. Let me, take this question forward with an investor, because all of this ecosystem building needs investments from key investors. Sridhar, you recently invested in one of the Murugappa Group companies in the EV space, which is more focused towards the commercial vehicles. What is the rationale of investment in this space, according to you?
Thank you, Nisha. As an equity investor, we are, of course, underwriting growth and profitability over the medium to long term. Our rationale in the commercial vehicle segment is that The underlying benefit of an electric vehicle is a significantly lower operating expense, in some cases as low as 1/10 compared to a diesel or a petrol vehicle. And that benefit is best realized when the vehicle is run 70 to maybe 150 kilometers a day. So those end use cases or applications where the vehicle finds significant running per day, those use cases are the ones that will find it most easy to migrate to electric mobility. And today, those use cases largely related to commercial applications. So electric three-wheelers that are used for commercial applications, either for passenger mobility or for cargo mobility, light commercial vehicles, and to some extent, even medium and heavy commercial vehicles, where the operating distances are fairly significant and fairly defined. We think those segments are best suited for migrating to electric mobility. And that's our broad underwriting thesis as our investment.
Right. So, Sridhar, I want to pick your brain a little more on this. There are two, pure play EV players which are heading for the IPO market reportedly. Now, how do you see the scenario in India when it comes to the exit options for an investor like yourself?
Good question, Nisha. Exit is a very integral part of any investor's underwriting thesis, and therefore, even though we come in with a fairly long-term investing timeline, underwriting that exit is important for us. In our view, the IPO markets will be very receptive to pure play EVs. The reason is twofold. One, we believe there is a long-term growth trend in electric mobility. Secondly, we believe there is a large enough profit pool that is available for electric mobility OEMs over the medium to long term.
Right.
Third, we also believe that unlike traditional OEMs, which always have this risk of cannibalization, where as they are growing their electric fleet, they are in some ways cannibalizing their traditional fleet. Pure play EV OEMs don't have that risk, and therefore we think those kind of platforms will be much better received in the IPO markets.
All right. Let me take that question also to add more perspective on this. Srihari, what is the view you're getting from across the board investors that you have an interface with when it comes to deal traction as well as investor interest in the electric vehicle segment?
Nisha, when you look at the last 4 years, I think we've had some fantastic transactions in the EV space, roughly about 800 plus transactions involving 250 odd companies, roughly about $6.5 billion of investments that have been made. Some marquee investments obviously has there in the public domain, investments in Tata, Mahindra, Ola, and you mentioned Murugappa Group also. Now, when you look at the momentum moving forward, we see a lot of positive traction, be it either venture capital or early stage companies who are looking to invest in technology assets that gives companies edge on new age technologies in the EV sector. We've also seen a lot of traction from the private equity funds and the sovereign wealth funds. We're also seeing interesting uptake from the ESG funds, particularly in areas related to energy transition, and we'll also see action in the battery material space coming in the near future. And finally, one of the key areas that we are also seeing is strategics. A lot of the existing OEMs or tier one suppliers, they are taking sort of interest in picking up assets in the startup ecosystem, because the startup folks would have already built and proven the technology, gotten to a TRL level 5 or 6, and they can take it on and then take that into production. Finally, we're also seeing interest from some corridors, be it the India-Japan corridor or the India-UK corridor, to invest in the EV ecosystem. And we are seeing interest across the value chain, be it automotive OEMs or be it suppliers. We are seeing interest across. And also don't forget, there is a lot of momentum that we are seeing in the charging space also. Finally, one last thing, we also expect to see Indian companies picking up assets globally as they continue to build their R&D capabilities in the EV space.
All right. So all those, the entire bouquet of deals as well as investments. And I must also point out that while raising funds from LPs was a difficult task in the recent past, for many of the PEVC community, a large part of funding still came for green and clean tech. And all that money is going to go into sectors of the future like renewables and EV. Amitabh, now we've set the stage for how important this sector is. But there are many aspects and eligibility criteria and valuation dynamics that Sridhar as an investor had pointed out. Let me pick one of the most important points which really defines whether a manufacturer can really break or crack a market or not in India. TCO, the total cost of ownership. How is that panning out and what are the dynamics over there? And apart from that, the other factors surrounding it.
Yeah, so TCO is number one, definitely. EVs clearly stand out. I think Sridhar mentioned a figure of about 10%. Anywhere from 30 to 50% in the case of a three-wheeler is the total cost of ownership benefit over the lifetime of the vehicle. So I think price, TCO, like you rightly said, is kind of well known. It's established in the commercial vehicle space, and that's the reason why we're seeing an uptake in this sector. I think the other important things from a commercial vehicle perspective are actually peace of mind. You need to have a very reliable vehicle, and hence service becomes a very, very important criteria for a person to decide whether they want to own an EV or not. I think OEMs will have to differentiate in terms of their service offerings, how quickly the cost of maintenance of these vehicles, those become very important. One of the other things that we as OEMs are also using, as well as the other EV OEMs, is of course batteries and battery warranties. Considering that a battery is about 35 to 40% of the total price of a vehicle, it is a very important criteria in a person's decision making.
All right. So Amitabh, you've just read my mind on this one. In fact, we'll slip into a short breather and we'll talk more in details about battery assembly as well as cell manufacturing and its chemistry as well as cost dynamics, because it's the biggest lever for pushing profitability in the electric vehicle space and a critical valuation dynamic there. With that, we'll slip into a short breather and come back and talk more about that. Welcome back. You're watching Big Deal and we are discussing the electric vehicle sector and the deal dynamics there. Now, Amitabh, we were talking about the cell manufacturing. Of course, battery assembly is something that is becoming in-house for most of the EV players. Cell manufacturing, where the government had supported with some bit of subsidy, also exists, and many players are looking at that manufacturing as well. In terms of certainty of one of your largest raw material cell and supply chain disruption that we have seen like in chip and semiconductor space, it can take place in the cell area as well. And on top of that, the cost efficiency. All this put together, how do you see this particular space, the R&D and cell manufacturing capability in India?
So cell manufacturing is extremely important. And I think given the government's PLI schemes that have been launched recently, I think it will see a lot of impetus. There are a lot of companies that have been selected for PLI, some permanently and some new ones that are coming on board. It's clear that cells do require a lot of infrastructure from an investment perspective, and there are different designs. Cylindrical pouch, prismatics. Newer versions will also start coming out. There's no doubt that India doesn't have too much control over the supply chain as far as lithium is concerned. Lithium, cobalt, phosphate, those kinds of things are not available. So I do see a different kind of cell manufacturing also evolving in our country that would be related to raw materials that are readily available in India. Those could be around the metal ion batteries like sodium, aluminum, iron, air. There's a lot of development and work already that is ongoing in those areas. We do believe that that will have also a significant impact on both the supply chain availability as well as price and performance according to the needs of India.
Right, Amitabh. In fact, Srihari, let's focus on the two important cell chemistry compositions, two types, LFP and NMC. What is the differentiation in terms of cost economics as well as the energy density and its availability for India?
Yeah. So if you look at the two cell chemistries, which is LFP and NMC, I think if you look from an energy density perspective, NMCs have a higher energy density compared to LFP chemistries. You look at safety stability, LFP is more stable. So globally, the way things have moved around is typically China is largely LFP chemistry, whereas the Koreans have focused on NMC chemistry. When you look at the Indian context, India is largely, at least moving now, a lot of the OEMs are moving towards the LFP chemistry. When you look at the cost dynamics of each of these, if you focus on the LFP chemistry itself, roughly 30% of the LFP is largely related to a cathode active material. And when you double click on that cathode active material, which is one of the biggest components for LFP, what you would end up seeing is 50% of that is roughly raw materials and 50% is roughly OPEX and margins. And lithium carbonate tends to be the largest cost in the raw material itself. So having control over your raw material becomes very, very critical. Now, in the Indian context, what we have seen is many of the OEMs and the cell manufacturers have partnered with global cell players. And what I believe is they will be piggybacking on their supply chain to get cost competitive on the carbonate pricing also. When you look at NMC, slightly different. The cathode active material in itself is roughly a significant portion compared to the cell itself, and nickel alone amounts to about 35-40% of the cost. And as we know, nickel is largely relegated to Indonesia, and that's why you've seen multiple investments going into Indonesia.
Yes.
In India, what we expect to see is if companies are looking more towards performance and high-end vehicles, they would focus on NMC, but largely for the sectors that we are focused on is LFP chemistries. And I just also want to echo Amitabh's point that India will see a sort of uptake of sodium-ion batteries. There are multiple companies working in space, and that is the only way to basically build a resilient supply chain with materials that are readily available in India.
All right. So sourcing the key raw material is extremely important, and also the certainty of their biggest raw material or component, cell, is also critical. Sridhar, from the investor lens, how do you see the investment interest and funding of R&D as well as cell manufacturing? And what are the dynamics at play when you invest in an EV? What component of that is related to their cell manufacturing or availability capability?
Nisha, today almost all of the cells that are used in India, they are imported. There is practically no domestic manufacturing, certainly none at scale. There is a lot of battery assembly and BMS manufacturing capability that is being built in India. So today we are to a great extent dependent on Chinese cells. Several conglomerates as well as auto component manufacturers have announced big plans for cell manufacturing in India, and that will sort of become visible over the next 1 to 2 years. As an equity investor today, we still feel that the cell manufacturing ecosystem in India is still quite nascent. Either it belongs to large conglomerates who are investing there, or it belongs to startup companies where we are still a little hesitant to ride the technology capabilities of these companies. So we are in some form still quite dependent on these Chinese imports. But what's important is that when you look at the whole battery, cell is one part of it. There is the rest of the battery, which has the battery pack, the thermal management system, as well as the battery management system. And the composite of that is what goes into making the entire battery pack. While we are still dependent on imports for China, I think there is a fairly strong domestic ecosystem that is evolving in the pack assembly,
yes,
thermal management, and BMS management in India.
Yes, that's right. Battery assembly is something that we have already got it in-house. Now it's the cell manufacturing that is the focus, as Sridhar was also mentioning. Srihari, when we talk about the government support, the subsidy, as well as the PLI benefits, both for electric vehicles as well as cell manufacturing, how do you rate it, especially with the reduction from FAME 2 to EMPS scheme?
Yeah, so I think we have to give a lot of credit to the government for the steadfastness in terms of supporting this sector. If you look at the time between 2015 to now, FAME 1 was about 60 million of outlay between 2015 to 2019. But when it came to FAME 2, roughly the outlay was about $1.2 billion, which completed in March 2024. And also, government has this bridge between April to July, which is the EMPS. As we know, there is a reduction in subsidy, but very clearly, the FAME 2 achieved its success, particularly in the two-wheeler side of it. And we built scale. And obviously, the intention and the direction from the government is to send a message that potentially at some point in the future, subsidies may go away. And that's why there's a steady reduction. And I think OEMs have realize this, and every OEM in the market is building their products with the inherent assumption that subsidies will no longer be in play. And finally, government has very strongly supported on the cell manufacturing, roughly an outlay of $2.25 billion on ACC PLI phase 1. And also not to forget the support that government has given, roughly about $3.2 billion to the zero emission vehicle manufacturers as well as the component manufacturers. So all in very robust support from the government.
All right, so that adoption has been supported by the government. But Amitabh, final question to you, and I have just 1 minute, even though a lot more to discuss on this emerging sector. But Amitabh, do you think subsidy going away is a pressure on the manufacturers? And second, what are the suggestions for the government for more support?
Absolutely. I think it is a pressure, but I think it will separate the men from the boys. It's clear that EV manufacturers also need to focus on profitability. And the only way to do that is to have control over your engineering, over your processes, over your design and R&D capabilities. I think government has been a big support. EVs would not have been where they are today without the government support. What I would like is that, most of the EV component manufacturers are MSMEs. It's important to also include them as part of the PLI scheme. Otherwise, there will constantly be this differentiation. Keep a long-term plan, a perspective rather than short-term, things that could be floated out. It helps the industry because these are, long lead items. And hence, it always helps if you know what things are going to happen in the future.
That's right. The certainty is one of the most important things for an investor so that they can bake in their estimated returns. So that's one thing that is clear. But yeah, a lot more from the government side as well as from the entrepreneurs. But thank you so much, all of you, for giving a deep dive understanding in this emerging sector, which is going to make it to the public market very soon. Sridhar, Srihari, Amitabh, thanks so much for joining us. And thanks to all the viewers for tuning in. Thanks so much.